afternoon and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be considering the impact of the ADP employment change on the US dollar. After the release of ADP's employment change report, we saw the US dollar sinking lower and it had caused quite a sharp move. If we consider the dollar's movement so far in the day, we have seen the US dollar move quite a good distance on both sides in today's session. Earlier in the day, it just carried forward with the bullish momentum from the final hours of yesterday's session. It traded with a bullish bias till the ADP employment change report came in, which punctured the bullish momentum and it caused the USD JPY to nosedive to the nearest support of around 110. The lower than expected job addition by private sector as per the ADP report is likely to make market participants cautious regarding the bullish positioning going into the non-farm payroll data scheduled to be released on Friday. Now let's consider the all the important market moving economic releases which we have got so far. For European economies, the data released includes the unemployment rate, and for North America we have multiple releases which we will also consider. The euro area unemployment rate, which declined to 7.6% in the month of July, and it is lower compared to the prior month's reading at 7.8%. The decline of 430,000 in total number of unemployed people brought down the cumulative total to 14.613 million, which is lowest since May 2020. Now let's consider the ADP report, which caused the sharp decline in US dollar. It showed private business hiring at only 374,000 compared to the expectations of more than 600,000. Most of these jobs created are in the services sector, with manufacturing sector adding only 45,000 jobs. After disappointing ADP print, at least the ISM manufacturing PMI didn't disappoint. For the month of August, the ISM manufacturing PMI is at 59.9, which is slight improvement compared to the 59.5 of prior month and better than expectations of 58.5. It has helped the USD JPY stabilize around 110 after a steep decline post the ADP report. On the commodity side, we saw the decline in WTI crude oil inventories of 7.169 million barrels for the week ended 27th of August, which is a lot higher than the prior inventory drawdown of around 3 million barrels in prior week. However, we can't expect too much appreciation in the WTI crude oil prices as the production and export of crude oil from the US is going to be is going to remain heavily impacted by the Hurricane Ida for next couple of weeks at least. Now let's shift our gears to the technical side. We will consider the outlook for the USD JPY first. After that, we will also consider the light crude oil's price trajectory and how we can try to profit from these price actions. Let's start the technical segment with USD JPY's technical outlook. This is the daily time frame chart, and here we have the USD JPY in consolidation phase with a narrow range around 110. As I had talked about in yesterday's session, the possibility of USD JPY catching the bullish momentum and appreciating towards 110.5 did materialize. It went on to make a high just slightly below 110.5, and after the ADP's release of employment change, we saw all those gains being wiped out, but that's a different story. Now we have this support in place around 110, and 110 has been a crucial level most part of this week. Earlier in the week, for the last two trading session, it was acting as a resistance zone which saw breakout in yesterday's session, and then we saw a fresh bullish move in today's session. Even after the ADP's employment change report, we have seen the USD JPY again finding support closer to the 110 on the lower side, and we have seen the USD JPY holding on to this area. So it will be interesting to see how the consolidation plays out, and I feel that if the USD JPY is able to hold and consolidate above the 110 at least for next couple of hours, then we will have a probability on the higher side of the continuation of this bullish break on the upside, and we can again expect the USD JPY to climb back towards the day's high in next couple of sessions, and eventually I'm expecting the USD JPY to climb towards this immediate swing high established around 110.7. So for that, next couple of hours are crucial, and we will have to see how it plays out, and accordingly we can take the trade positioning. If we consider the lower time frame charting, we have this freshly minted pivot point series. Today being the first day of the month, we have this new series plotted, and it has the central pivot point just slightly below 110. We have the central point at precisely at 109.838. So we can expect the price area around 110 to play a crucial role moving forward, and we can expect this price zone to act as a near-term support, and that's what we are also observing in today's session. So if we see the USD JPY respecting this support and holding on to this, then as I said, we can indeed look for further gains in coming days. The regression curve remains almost flat with slight bias on the bullish side, as we have seen the formation of higher highs and higher lows for last couple of weeks, and that has resulted in the inclination of the regression curve turning northward. For optimizing the entry and exit, we will have to rely on the confidence zone of these three SMAs. We have the 50, 100 and 200 SMA converging closer to 110 level, and this is the price area which is going to prove quite important moving forward also. As I said in my opening remarks, we have to wait for at least the end of today's trading session in the North America, and by the time we come back for the Asian trading session, I think we will have much more clarity regarding the possibility of price moves in the USD GPY, and this is the immediate support for USD JPY. So as long as USD JPY is respecting this price zone, we can be fairly confident of the continuation of this bullish momentum, and we can expect the resumption of the upside move in next session. But if it doesn't hold, and if we have the breakout on the lower side, then of course we will have to change our outlook and get ready for going short. Now let's see what's happening in the commodity side, where the instrument of choice is light crude oil. The light crude oil, after climbing sharply from the levels close to 61 USD per barrel level, the light crude has gone into a consolidation phase for most part of this week. It has traded in a narrow range just little below the crucial mark of US dollar 70 per barrel. In today's session, its losses have increased, and it has sharply declined from the levels close to US dollar 69 to almost close to US dollar 67. That's around 2.5 percentage point of decline. But on the lower side, it has stalled, and we have seen it finding slight buying after the release of inventory data, which, as we had discussed earlier, have seen a significant drawdown of more than 7 million barrels. And in near term, that is likely to help the light crude oil stabilize, and I am not really expecting any big sharp move on the lower side. Rather than that, it is likely to spend next couple of days with sideways momentum, and underlying momentum is still bullish. So we can adapt a strategy of buy on dips in the light crude oil, and I'm expecting it to prove profitable enough If we consider the lower time frame charting, we have the center pivot point of this month's pivot point series at around $68 per barrel. And this is where the key lies. We will have to wait and allow the light crude oil to consolidate and hold above the central pivot point area, and only in that case we can gain in confidence and go for long positioning. Otherwise, if we have the breakout, then we will have to consider going short, but for that we will need further consolidation and it will need to hold below the central pivot point at least for a day before we can make our mind to go short. And till then, I would say that it is better to remain on the bullish side of the trajectory and continue to look for buy on dips opportunities. We, if we consider the regression curve, it has also started to incline on the higher side after this sharp upside momentum. But as the price action has gone sideways, it will be interesting to see how it unfolds, how it reacts moving forward, and a lot is going to depend on which side we get the breakout. If we consider the price action, we have the support in place around this prior swing low, and also on the lower side we have this 200 SMA in play around the price levels of $67, and that is where we are seeing the reversal happening in today's trading session. The light crude oil has gained almost close to 1 percentage point from the day's lows, and it is now trying to inch higher. It will be interesting to see how the day closes. If the light crude oil succeeds in closing above this support zone, and if in today's session we see the light crude oil consolidating for early hours of the day with price remaining above the support zone, then I think in that case, by the time we see the start of trading in the North American continent, we will have the possibility of light crude oil gaining ground and moving back toward these immediate swing highs. But for that, a consolidation while holding above this immediate support area is a must, and only in that case we should be taking our chances of going long in the light crude oil closer to this support zone while keeping the stop loss little below this 200 SMA. I think the stop loss anywhere around US dollar 66.5 per barrel should be good enough. And on the higher side, we can expect a move towards these immediate swing highs and eventually even further high towards the levels of US dollar 70 per barrel. So that's my take looking at the current price formation of the light crude oil. If any of you have any query or any idea to share, you can write to me in the feedback section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have You can also check out the Leucoscopy Analytics page for further developments in the market. Whenever you want to start trading, if you haven't done so far, you can check out the JForex platform. It provides a superb trading environment and a very low cost trade setup. We are also available on the Facebook. You can reach out to us there. Thank you all for joining in. Have a fabulous day ahead. See you next time. Till then, goodbye.